first points you need to be thinking about, and then we'll go through an example. I'm going to use last Wednesday's Bund as an example, because some of my hypos gave me some good ideas, gave you those setups. So we'll walk through that, how I came to some of these ideas. So the whole point of creating a hypothesis is basically to order your day so that you find the right time, the right place to trade. So first up, you need to identify areas that are going to create a trade. Is the market going to start to change beyond certain levels? Next up, you need to think about the type of trade that you're likely to be getting. Is a break of a certain level going to create a breakout trade and a momentum type move, or is it merely going to bring the market back into range, or set up something else that we're expecting? If you take from a profile point of view, which I'm sure, as you know, I do like to reference, you can see that certain areas are likely to actually cause a reaction and a move to create a more muted range-bound trade, at least for the initial part of the day. Next up, you need a line in the sand. You need to have a point where you're going to say, right, this trade is done here. It's not likely to materialize if we get beyond a certain point. What this does for you is it stops you pushing a trade that isn't there anymore. People become very married to a trade. People decide that that's what's going to happen, and they're going to keep going at that trade. If you've got this line in the sand, you can at least hold your hands up and say, right, that trade's done now. I'm now going to start thinking about what else we can do. And that's also the point of having multiple hypotheses. If you don't have numerous different hypotheses, you're merely, again, going to have one hypothesis, and if it breaks your line in the sand, you've now got nothing to do for the rest of the day, and you're scratching around looking for new trades. If you've got multiple hypotheses, if one doesn't play out, it's likely that you're actually seeing another one actually play out, so that you can then have another trade there. So that's the whole point of the creation. It orders your day, orders your time, and orders the types of trades you're going to take on. So how do we do it? Gather your information. This is the first thing. Get down facts, things you actually know about the day. So this is going to be the previous day type. Did we have a trend day? That's likely to influence how the next day trades. And you'll build this up for experience. But after a trend day, generally, you're going to be looking for a consolidation / potential second day trend. So you're always looking to play in that direction. Is it more of a liquidation day, whereby you've got a move that's created a bit of range extension, but actually is only people getting out of trades? This is symbolised by a P-shape or B-shape day on a profile. If you see that, then you've got to think, right, we actually need new initiative to get this move going on again a second time. Next up, think about your key levels. Where are things going to change if we break certain levels? A lot of levels may be mid-range and create scalp opportunities, but things aren't going to change until we're through those key levels. Next up, assess your current ranges and the direction of the market. There's no point in expecting a 100-tick range move in a market that at the moment's rarely doing more than 30. Yeah, it might expand range and do 50, 60, but to do 100 is probably quite a big ask. And again, general direction of the market. Be this bigger picture and smaller picture. So are we in a range in the middle of an uptrend, or are we just fully range bound? Finally, if you've got the info, the initial balance type, this is going to tell you a lot. If the type of initial balance, which I talk about in various different streams, will tell you a lot about how the day is going to work out. Have we got an open drive? Have we got a large initial balance? Have we got a small initial balance? And also your open in relation to the close. Are we opening with a continuation of the previous day's moves, or are we opening contrary to the previous day's moves? Right, so once you've got that info, so you've got those facts, charting process. What you want to be thinking about with your chart is giving yourself an idea of what can go on. This is your large time frame, your profile, and your 60-minute charts. That's what gives you the overall context of the day. Now, whilst it gives you context, it's not going to give you very nice stops. If you take a trade purely based on, say, a daily candle, you're going to be looking at a rather large stop. This is where your short time frames come in. 15 minutes, depending upon markets, 5 minutes and 1 minute. 1 minute's really, I'm thinking, only for the much quicker markets. I'm thinking DAX, oil, gold, things like that. These are the time frames you want to be looking for to pick those execution points, those little areas that are going to start to trigger a move, perhaps before you break those key levels on the much larger time frame. So that's how you want to be looking at your process of executing trades. Get your ideas down and then pick your points to take the trade on. If you don't get these points setting up, even though the trade may play out, it's not going to be an easy one to get on, and therefore you can hold your hands up. You can sit back and say, right, that's not there. It's not a trade to be taken. All right, so let's move on to an example, and some of these ideas I think will become a little bit more clear. So, quick look, bigger time frame to try and have a look at what we've got. This is in the Bund, as I say. This was Wednesday morning last week. So what have we got in the Bund? What we've seen previous few days, very range bound, 5 days in a row. This is on the back of generally an overall larger trend. Generally this week, smaller ranges and lower volume as well. This is the run up to Christmas, remember. So not a great deal going on. What we have seen though is Tuesday, rejection, or sort of a bit of an actual down day on the back of this rejection candle higher. This was above 67 and 64, which you can see on the hourly chart. This is 67 just here. So you can see that ultimately we're not doing a great deal. Ranges aren't that big either, so you can't be expecting too much. Ranges around about 40-50 ticks on a day. So that's like to be something that you would be thinking about on the Wednesday, that if you do get a move, 50-60 ticks is probably about your limit. So in terms of context from the hourly, we've got a very clear range here. 58s, perhaps up to 67s, and down to 18s. That's your main range that we're currently trading in. Opening at the moment, bang on the close at 35s. You've also got a double bottom down here, 18s and 17s are two lows. And then if this breaks, you're into this other lower range, which is 18s down to 79s. Middle of this range, got a couple of highs at 98. So already we're building up a picture of what the market wants to be doing. At the moment it doesn't want to do anything, so we're only going to see change if we break out of this range. To the upside there's not a great deal. Above 67 you've then got the highs of this contract at 78, and there are no more levels in this contract, so quite hard to pick areas beyond there. To the downside, we've twice held this same level now. You shouldn't then see that level held again. So if we get down to 18s, we could see this break. And then look for a little bit of a move lower, 98s, small areas at 93s, and then 79s. So that's your hourly, daily context. From a profile point of view, what we've seen, we've got a very clear selling tail. So that's a nice rejection sign. That's a good sign of potentially the end of a move. That was on Monday. Tuesday, you then get this V-shaped profile, whereby you get selling very quick from the open and value shifts lower. This effectively is anyone long on this day up here getting out of their trades, and that creates that liquidation, but doesn't create continuation because it's not a new time frame participant, or sorry, an other time frame new participant. It's merely long getting out. So from that point of view, you now think if we are to move lower, you need to see new initiative come in. You need to see new selling come into this market. If not, then as these longs got out, they're now wrong. You can now see people start getting back in up above the single prints midpoint from Tuesday. So that's what you got from profile. We got close at the VPOC as well, so it's not showing that this move down was that strong. And the other facts that you can see from the profile here, very poor structure value area. We've also got the VPOC right at the top value, so this could be a reference point. Market could react to this and bounce back up into range. But ultimately, in terms of value, very little going on. Extremely muted changes in value. One thing I would take though, value's gone higher, value then quickly shifts lower. So that's what we've got from the profile. Not too much in terms of larger move away, but we have got the situation of value higher and value then rejected. So we've certainly seen a little bit of rejection, but ultimately, as I've said, until we break the range, nothing changes. Bring it down to onto 15 minute. This is where you can start thinking about your trades. So you can see this is where we're opening the 35s. You got a little high here. This is the high on this kind of flag. 42 is the high. That then becomes a bit of a point. If you get through there, anyone short into this area is then going to start thinking about getting out of their trades. Now, it's not going to create a large breakout type trade, but it could give a little bit of a move higher and negate any moves to the downside. So that I'm starting to think could well be the line in the sand for the day. If we start getting above here, then I'm not going to expect any move and break of the 18s. As long as we stay below, then I think this break, this double bottom, is still very much on. Now we've also got a little range lower down. This was created on Tuesday afternoon, around about 27s down to, you could say 18s, but really 22s. So 27s to 22s. If we start getting back into that range and then can't reject and move away from it, we can then start coming off and moving lower. Again, that brings us 18s into play. Now, unlike the move up, which I think is likely to be quite two-way, the move down, I think is going to be more of a momentum breakout type trade. So you're going to see faster trade. You're going to see more volume, more velocity in the market. That's what you're looking for. That's where you can have a slightly more aggressive style trade compared to this move higher, which is likely to create more scalp type, smaller move trades. Also, what you can see from a 15 minute is 93 start to show up a little bit clear, as opposed to 79 that you're seeing from the alley. 93s is also that value area low that we had on the previous slide, just down here. So you've got 93s as well as a potential area that we could stop out, or certainly an area that I'd be considering taking something off if I am short down into that area through the 18s. So let's go and have a look at a couple of, or three hypos. Hypothesis 1. Look, if we get a break of 42s, then I'm looking for a slower move higher, and it's going to be more sort of stuttered in the way it moves higher. So we're going to look for small areas to take a little bit of a break at. So going to the profile, if we break these 42s, this is your line in the sand. Above 42s, then I think you start looking up to these single prints at 55, which could cause a reaction. If that can't then break back below 42s, then I think you can start moving up and complete the move right the way back up to this selling tail. So that's your first hypothesis. I'm expecting it to be a bit more of a slow trade, one that you're going to have to take your time about and react to small areas. You know, don't expect trades to be able to run for a long time. Next up, hypothesis 2, this is slightly more exciting, if you will, is if we can stay below this VPOC and certainly below 42s, you can then start looking for a move lower. Now, it's not to say, you know, if you're going purely off the profile, you'd be happy to sell the open and put your stop above 42s and say, right, we're going down. If you want a more accurate, if you will, entry point, you can wait, see the market come into this range down here. As long as we hold inside, as the hypothesis is showing, then we can start having a go lower. And this could be the point where you can actually start to get a position on, looking then to add through 18s for that momentum, for that faster move. And that's where you're going to get that chance to add on to your trade. And then target-wise, 93s, that first little area, would be your main target on that, 93s and 79s. And finally, if we do get a break of 18s that fails, you know, the market is slightly more bearish based on this move lower, the drop in value towards the bottom of the range after a rejection. However, if we break the 18s and then fail, and the point we could fail at, remember that previous VPOC and value area high, 13s, we could fail there, back above 18s, and then I think you're going to rotate back higher up towards 35s, potentially 42s as well. So there's giving you a few different ideas that not only could you think about that break of 18s, if it doesn't work, you've then still got a trade if we start getting closes back above 18 after a failure to move through 13. It's not to say buy 13, is to say if you see that failure, then you've got a clear sense of what could be happening, that the market has had its go lower, found no new sellers, and then start to rotate higher. So there are 3 high posts for the morning. So let's have a quick look how it plays out and how you need to keep going with these high posts. So this is the morning trade. What we actually got was a dip down towards that little range, down to 26, back up, double top, and then we come off. So now, not only have you got that range that we had at 27s to 22s, you've got a small low as well. This can become your trigger point on the day. Short below 26, and then you're looking to add on as we break the 18s. You've already got a nice position here. So if you add in on down here, yes, you're bringing your average price down, but your average price is still going to be above the level. If it doesn't break, then yes, you're probably going to end up with a scratch. If it does, then you've managed to add on just as we continue lower. You see the delta continues to fall. Volume picks up slightly, and we do come off down towards 91. We then create a flag, hold the VWAP. So that's looking pretty good for potentially further downside. Either way, value has shifted very much lower as well. So we've got one of two things. This could end up being another B-shaped day, or we can end up seeing continuation. One last thing to take in note though. Yes, we've got this flag created, and the flag's got a nice 40-tick target on it. If we start breaking these 09s, a lot of people short are going to be using this VHOC as a trailing stop. We've also got this high as well now, which could be a trigger point for people to start getting out. And that's what happened on the CPI, very small miss. We got this very quick reversal straight through the single prints. Single prints, once they start trading through, likely to trade through quite quickly, and that's exactly what we got, straight to the upside. Took the single prints out, and then we traded higher for the rest of the day and held consistently back above 18. So we got the failure lower, it just came later on, and this is why you need to keep updating your hypotheses throughout the day. Keeping a watch on what's going on, how things are developing, and keep looking for where the next trade could be, where your new line in the sand is, that new line in the sand, 09s.